the market is down by 5-10%, this stock is up by, let's say, 8 or 10%. In 2017 I saw exactly the same kind of narrative, and now in 2024 also I am hearing exactly the same kind of narrative. These are the two things which attract most amount of retail investors. Whenever those individual portfolio goes down, index also goes down. Hi, if you are watching this video, it means you are my premium client. Now, I've been hearing this doubt recently that, hey Nikhil, even though the market has gone down by 8-9%, 10%, there are some stocks which have gone up by 10%, 15% also. So, aren't those the best investment opportunities for the next 2 years, 5 years? Let me give you an answer for that, because it's been going on for last, I would say, 10 years, 20 years, and every time when there's market about to correct, this kind of narrative is always given that even though market is down by 5-10%, this stock is up by, let's say, 8 or 10%, so invest in these companies. It's a standard trap. I would request you to listen to this again. It's a standard trap. In 2017 I saw exactly the same kind of narrative. Even though the market is going down, these stocks are going up. In 2021 I heard the exactly same kind of narrative, and now in 2024 also I am hearing exactly the same kind of narrative. It's also in March 2020 also I heard these kind of narratives. It's a standard trap. Do not go for such companies. Acha, you will find 2 to 3 similarities in all these companies. A, the thing I told you that even though the market is going down, these stocks have gone up by 5, 10, 7%. They are in momentum stocks. B, they will be heavily overvalued. So the price to sales ratio you will see of nearly 30, 40, 50. You will see the price to book also 15, 18, 20. Such kind of exuberant valuation will be there. And third thing will be there would be the stock has done very well in last 3 to 4 years. So the stock has become 4x, 5x, 7x in last 3 to 4 years. Now these are the on. If you remove the valuation part, the stock has done very well and the stock is in momentum. These are the two things which attract most amount of retail investors, and that is why they ask these doubts. Why it is a trap, you have to understand. So the first question I'm going to cover: even though index is going down, these stocks are not going down. Why does that happen? See, the stock is not related to index. The index is related to stock. So index is nothing but a portfolio of some individual stocks. So whenever those individual portfolio goes down, index also goes down. But it does not mean that one individual stock where there is no selling happening can also go down, has to go down when the index is going down, right? Let's understand it in the simple language. Let's say there is a 500 crore company and there is an investor who has 100 crore pumped into it, right? Even though index is going down 5%, 7%, 10% also, if that investor is not exiting the company, in fact he's pumping up the stock by buying, let's say, 2 crore, 5 crore every day, it will not go down. It has nothing to do with the index. Index is a shadow of individual stocks cumulatively. Cumulative stocks are not the shadow of index. Okay, so what happens is, in such kind of trap cases, I'm not going to name any stock here, but what happens in these standard kind of traps is that these people who have invested the money into these companies, they keep putting money even though they know the valuation level are exuberant. Apart from that, they also already know that the stock has already made multi-bagger. The index is going down, the market itself is being weak, so they keep putting money and they start these kind of narratives. Market is going down but the stock is going up, and the retail investors who want some 10, 20, 30% returns in 1 month, 2 months, these kind of mentality people, they think, okay, let's invest in this company, it will go up 10%, 15%, I will exit. Even if it doesn't go, it comes down by 5%, 7%, So I already have a stop loss in place. So what I'll do is, if the stock goes down, it will get exited by 5% loss, and if I will make 15%, 20%. And this is why I said it's a standard trap, because when that big investor or big operator exits that company, there will be no stop loss to protect you. In most of the cases, these stocks go down and they form a lower circuit, so there will be no volume to buy from you. You will keep exiting, but the stock will not get exited. Even though you put stop loss, even though you put every day, you put aftermarket orders, whatever you do. And this is why I called it standard trap. The stock will go down by 70-80%, and then the lower circuit will open. And this is why retail investors should not go into these kind of stocks. A, who is trendy, B, which are doing way better than the market, and exuberant valuation. Exuberant valuation is the only thing that you have to take care here. So if you see this kind of properties in some companies, even though they are doing way better than the market, run away from such opportunities. What you can do instead is, you can go for the companies which are undervalued, which are where the promoters are buying their own company, and company remains undervalued. These are the two things that can make you good amount of money in the long term. Apart from that, if you know how to look for financials, how to look for balance sheets, how to look for all these things, definitely that will help you a lot. That will help you a lot. But never go for such kind of traps. I'm again saying this. This is a standard operator game. Whenever these companies had 200-300 crore market cap just 5 years back, now they are at 2000 crore, 3000 crore market cap, because these companies became 10x. And such are the companies where these kind of traps are getting opened up in nowadays. So if you really want to trust on my experience, do not go for such companies. And a lot of my clients recently asked this question, so I thought I'll make a video on that, and that is why I'm doing this, and I will share it with you. Share this video with one person who you really think, who you really care about in financial world. Don't share it with too many people, because too many people have too many doubts, and whatever I feel I have already shared here. So not everyone has the understanding of going into this deep and understanding these concepts. Okay, this is a client only content, so only share with one or two people only. Okay, thank you.